Good evening. Nice to have you with us. Zambian elections yesterday, and the major focus of those elections was not things like service delivery or attitudes to government. The crux of it was China's involvement in that particular country, and it's a massive debating point. And that's why we've grabbed hold of Charlie Pistorius, who's an analyst with Frontier Advisory, and Dirk Kotze, who's Director and General Manager for Africa at the Beijing Axis. The economic love affair, trade relations, fair or not, China and their involvement in Africa. Good evening, gentlemen. Nice to have you with us.
Good evening.
Thank you for your time. Where do we stand here? Is this a balanced trade, first off?
You mean, is it win-win
Yes.
relationships for all?
Yeah.
I think to comment on that, balanced in terms of the trade profile, break it down by numbers. We roughly, from China, our South Africa and Africa's import-export basket with China is split relatively well. But I think when you're asking balance, you're looking at not just in the cheap goods coming out, the raw materials going out, but what's fair. So it's certainly, let me put it this way, it's not any more unbalanced than, say, Africa's trade with the US. Does that answer?
That does sort of answer it, but I still get the feeling, Dirk, that we're sitting in a situation where we're not maximizing what we can out of this trade with China. They're taking our raw materials and they're selling us back product.
Well, yes, that is very, very true. If you look at the profile, at the components of trade, then you see Africa exports almost only raw materials to China and then imports manufactured goods. In fact, some African countries are deindustrializing due to their Chinese relationships. China-Africa is going to be a long-term relationship. It isn't going to be beneficial on all levels soon, but there is development, there is investment coming into Africa from China, and that's better than we had 10, 15, 20 years ago.
I'm going to take the negative view here, okay, so that we can get some opinions out. The negative view is that China is only in Africa because we have raw materials that they want, and that's it. Once those raw materials are finished, they'll move on.
Well, remember that Economist cover not too long ago? It had the Chinese, and it was neo-colonialists. A lot of that's effectively the argument saying. I think we like to change that on our presentations we do by saying neo-capitalist in Africa. The time horizon, Dirk just mentioned, they're here to stay. Investments have an incredibly long time horizon, over 50 years. The trade relationship is only just beginning. So those who feel scared, or now's the time to sit up and look at the China-Africa relationship. Trade is going to more than double by 2015 of what it is today. One kind of needs to take pause there for a moment. Investment stock at the moment is incredibly low. China-Africa relationship, the engagement story, is not yet one of investment to the degree that we think with the traditional partners. It's mostly trade, and that capital stock, the investment, is only going to pick up tremendously over the next few years. It's, yes, all backed by resource and food security to a large degree, but the engagement has gone so diverse into all economic sectors. Look, I like to draw the comparison again with the US. The US-Africa trade is far more purely about oil. And sure, with China, if you put raw materials and minerals, metals together with some oil, it is the majority of the export basket. But I'm sure we're going to start talking about that just now in terms of South Africa's position on BRICS. There's a lot of shifting momentum on the horizon. So it's not just all about the resource play. I think that's the old story, and that's my personal opinion. I think it's a generalization.
But Dirk, you were saying before the show started as well, though, that we as Africans don't really have an affinity with the Chinese.
Well, not yet. I mean, if you look at history, recent history, people in Africa generally have a longer and deeper relationship with the US and with Europe. Even nowadays, still Premier League football, if you look at American cultural exports and so on and so forth. Nothing about China really appeals to the average African at the moment, other than China supplying cheap goods or supplying investments. Now, you mentioned earlier that China is only here for the raw materials. Well, that's partially true. I think most countries would invest in a region only for their own benefit. But that is the start of a longer, deeper relationship. As Charlie also mentioned, investment into Africa is still fairly low risk. Chinese companies come here and try to work with sovereign guarantees. They are here in the form of construction companies who don't invest in projects from their own balance sheet. So the big difference perhaps between American involvement with Africa or American trade with Africa, European and Chinese trade, is that the Chinese are very visible in Africa, much more than they were before, and perhaps even more than other regions are.
But now hang on, you say that they go in from a sovereign trade point of view. Are they, in both your opinions, researching where they're going in well enough? Because in my opinion, and there have been some cases, the most recent is Libya, which I've just returned from now. And there, the Chinese had construction contracts running in the billions.
Yeah.
And they've taken a serious whack there. Maybe not in their terms, but it's still a lot of money that they've taken a knock for. Are the Chinese researching where they're going into, or are they just going in where other people fear to tread?
No, I think it's fiercely researched. Now, they are operating in Sudan, in Libya, in more of the conflict areas.
And they're prepared to take that risk?
And they're going to go back. They're going to be the first that will probably enter back. The large telecoms, ZTE, Huawei, they're already back after, you know, that initial, after 6 months ago, the initial migrants.
Why are they prepared to take these risks?
Well, keep in mind, no one thought Libya was going to happen. No one predicted the Arab Spring. So you can't really blame the Chinese for having bad judgment there. They had to evacuate close on 30,000 people from Libya. So that's what I say, the visibility is just much higher in Libya, even though Italian or French oil companies also had activities in Libya. In terms of researching where they go, they do research it like any investor would, but in many cases they don't really have much of a choice of where they go. They would go to the Sudan for the oil, Libya, Algeria. And if you look at China's investment profile in Africa, it is very slanted in favor of oil-rich economies. China is consuming an enormous amount of oil. They can't supply their own needs. So in terms of taking risks, their risk profile is actually decided for them by circumstance, not by themselves.
I just want to pick up on one of the points Dirk
Yes.
said, sorry, Jamie. But I think often, yes, it's undeniable if you look at the trade basket and even investments that the oil-rich countries are favoured. Look at the likes of Ethiopia or Kenya. Very important, key China-Africa trading partners and strategic partners, yet they don't have oil wealth. So it's about the agriculture there. It's far more manufacturing or power, ICT in these countries. So that's just...
True. When you speak to Chinese business people in China, they say to you that they see Africa as an opportunity at the moment for resources, but in the future as a manufacturing hub, because they know very well themselves that manufacturing costs in China are rising. China is becoming less competitive. The currency will appreciate over time, and they see Africa as the next manufacturing beachhead for their own enterprises.
Do you see Chinese companies then putting in factories in Africa, starting to manufacture here and export out of our region?
That's happening on a very small scale at the moment already. But yes, that is inevitably what I think will happen. Africa will become a more favored investment destination over the next 20 years. And along with the Chinese investment coming in, you may also see, for example, Brazilian or Turkish investment coming into Africa in the form of investment into, manufacturing enterprises.
Okay, now where are we going to hit the tipping point here? Because the tipping point's going to come at some stage where China is so heavily involved in Africa that the other countries, the US and Europe, have to then start taking a position. What's the time frame, and is that a possibility?
I think the tipping point's already been reached.
Oh,
if
really?
you look at certain numbers, especially aid. Now I know I've just, for us to work in the China space, opened a whole new can of worms, as they say, because the definition of what is investment, what is aid, is always a bit grey. But you've seen the traditional donors really step up their aid contributions already to Africa in terms of development finance. On the back of David Cameron's visit not too long ago, one of the UK development finance institutions I can't remember the name exactly, but I remember reading a $3.3 billion earmarked for Africa and South Asia only over the next 3 years. Now that's a chunk of money, and that's for equity finance. So it's not quite aid, but it's in the development finance, the aid assistance fray. So that matches up perfectly with the likes of China Africa Development Fund, the fund established by China Development Bank under the State Council. So saying all of that, it's an official fund to deploy up to eventually $5 billion into equity projects throughout all sectors, solar, renewables, and taking small stake to very large stakes, even coming on the back of manufacturing in the special economic zones, especially supporting the creation of these Chinese-sponsored special economic zones. But to date, the CAD fund has deployed $1 billion, and it's going to be capitalized with the next $1 billion. So these numbers match with the UK, and the threat, I think, has been seriously recognized already. And I'll say threat in inverted.
Well, I think in terms of a tipping point, the financial crisis in 2008 may have been some kind of tipping point, because nowadays yields in the US and Europe are quite low. The economies are stuck in a rut, and industrial concerns may see that Africa is an option. We see already that many Portuguese or Brazilian, well, rather Portuguese companies are moving to Mozambique and Angola, because that is where they can make more money than in the home economy. And when you're talking about Africa industrializing, one can't talk in terms of only manufacturing as if it's one activity. Companies are starting to assemble in Africa. They import semi-knockdown units into African economies, and for a very low price they assemble over here. As time goes on, they may start assembling more and on more complex levels, and eventually they may manufacture. They may buy steel locally. So it is an ongoing process, and you can see on the ground that there is definitely a movement in that direction.
There are two things that seem to be coming through here, bubbling under. One of them has got to be food security. We've got to touch on that. And the other one is China shooting itself in the foot? Because while they're coming in and taking out the materials that they need to manufacture, they're also coming into Africa, and they're taking over the trading positions of Africans within the continent as well, and that may become a problem. We'll continue talking about this in just a moment. Don't go away.